Now, yesterday clearly was a very strong day, and I said on Friday that I thought we'd have a good chance of gapping up going into Monday or Tuesday, which is today. And if so, the best trade would be a two-legged pullback. And those two-legged pullbacks are often bad looking, and it makes it hard to take them. First, a reversal of the day. Pretty big tails top and bottom. Looking at that, I don't think it's a great short. I definitely wouldn't be buying it for a trend from the first bar up. You know, this is climactic behavior, and there's too much chance of some kind of a pullback. Each time the market reversed a swing high Friday, it sold off at the first opportunity. So here's a new swing high. It's above this high and this high. So the market might try to sell off at the first opportunity. Okay, a double bottom and a doji. I think that's a decent setup for a short, for a scalp. Again, at this point, I'm expecting that the strength from yesterday would continue into today, and the best setup is a two-legged sideways to down pullback, you know, maybe toward the moving average. Okay, bear trend bar, you got a down leg, an up leg, a down leg. So this is a two-legged pullback, not a great looking signal bar. It's also a test of yesterday's high. I think it's okay for a scalp, but to me that's not a convincing low of the day. Okay, you got a double top and a double bottom. Does it make sense to buy the double top? I can't convince myself that this is a strong low of the day, so I wouldn't buy the double top. Then what about selling it as a failed high two? You have one leg down, two legs down, and attempt to go up. I think that could be okay. So now you have trapped longs who bought above the double top, and this is also two legs up. You have up and then down and then up. So that's a two-legged lower high. I think that's a decent scalp on down. Now, you got a double bottom here, and you have a two-legged pullback on a day that has a very good chance of being a bull trend day. You know, so what I'm looking for is a decent-looking signal bar. A lot of times with trend trades, especially in strong markets, you don't get decent-looking bars, and you just have to take what's there. Even though this is a two-legged move, and what I talked about on Friday, and again, before the open today, that a two-legged move is the ideal setup. I don't like the outside up bar. I'm hoping that the market will pull back and give me a double bottom pullback, because I could set up a really nice swing for the day. You can get 10 points on a trade like that. Two legs up, but instead of triggering down, it's an inside bar followed by another outside up bar. So at this point, I'm still hoping for a pullback to a higher low. This is something of a wedge bear flag. You got one push up, two pushes up, three pushes up. But instead of pulling back, the market broke out. Now, I mentioned that whenever you have a spike down and then a spike up after the first bar, the market oftentimes will lead. It's in breakout mode, and traders will have buy orders above the top spike and sell orders below the bottom spike. Normally, it's easier to trade. Top spike is at the high of the day, and the bottom down spike is at the low of the day. But the traders obviously bought the breakout above this spike. They bought the breakout above the high of the day. Now, every time the market has gone to a very strong breakout, the first pullback resulted in a sell-off. So we got a strong move up. We got a breakout. This could turn into a final flag. This could be the high of the day, and the market could end up into a large trading range day instead of a bull day. It's an okay scalp for a final flag. Looking entry bar. The next bar, though, is bad. So is this a breakout pullback long? You know, personally, I don't like signal bars that are small dojis, but yes, it is a breakout pullback long. I personally wouldn't take it. This is a fairly strong bar, so it can be viewed as a spike down, and if it's a spike down, it might be followed by three pushes. So here's the first push, here's the second push. On strong trend days, instead of getting the third push down, the market rallies after the second push, and it becomes just a two-legged pullback and a bull. I was still hoping for more pullback to buy, hoping to get a double bottom pullback. I should have bought this since this ran without me. I should have been more eager to get long. And you know, the market gave these two bad-looking signal bars, but this bar worked. It turned into a second entry of a breakout pullback, a breakout above the opening high, and then a rally. Okay, inside bar, breakout pullback, should be okay for a scalp. Okay, and then you have a bear inside bar. In this kind of a situation, you know, you could either take the price action entry and short below it, or this is the kind of situation in which I would even consider an early entry and placing a limit order to go short at the low of that bar, thinking there'd be a fair chance for a two-legged pullback after a three-push up move, especially following a buy climax. Okay, instead, small bars which usually means that the market goes sideways. There's a risk when you're expecting a two-legged correction, it can be a sideways correction. We're in a tight trading range, and it's unclear at this point whether the wedge would win and the market would come down, and this becomes a spike, and this a channel, and the market comes down to here or here. The other choice is that the market goes sideways and forms a trend resumption bull. Trend resumption bulls are fairly uncommon, maybe one or two a month, and spike and channel patterns are almost an everyday occurrence. So if you have to choose one of the two, you'd have to bet that spike and channel pattern would be more likely. Okay, so is this the end of the two legs down after the wedge? The market's corrected for more than an hour, so it's possible that the markets could start going up. You have, look at this low. This low is one tick lower. This low is one tick lower than that. This low is one tick lower. This low is one tick lower than that. It's possible that the market could suddenly break out to the downside. Whenever you get two or three one-tick lower lows or one-tick high, the market usually will start to run. The market had its chance here. This would have been a decent setup for a big move down, and instead the market failed to sell off. Okay, this is possibly a large final flag, and we have a two-legged higher high. We should get two legs down or sideways from that. Again, instead of a strong sell-off, we're getting small sideways bars. Not good for the bears. Small outside up. In general, when the market is going up and you see a pullback, anytime you see a bull trend bar, you can buy above its high. So you can buy above here, maybe here. Second entry would be better, buying above here. Maybe buy here. Here's a second chance to buy above there. Maybe buy here. Second chance is always better. So instead, buy the second opportunity. You have to buy above a bull trend bar and a pullback. Okay, another one. So this is one tick higher than that. This is one tick higher than that. This is one tick higher than that. The market is making one tick higher highs and still making higher lows. So it's tough. It looks like the market wants to go up, and it's not going down despite its opportunities. Normally with trend resumption bulls, I'd like to see the bears get trapped. I'd like to see a spike down, like maybe below a swing low, because that would draw a lot of bears in, and that's usually the most reliable long setup. The market is in the tight trading range, and then it has a bear breakout that reverses up. But apparently the bulls were strong enough today to prevent the bears from getting a bear breakout, and the market just kept drifting up. Another small tight trading range after a big tight trading range. We had this tight trading range, a breakout and a two-legged pullback. We have another breakout by one tick, and then a pullback, and then another breakout by one tick and more sideways action. This is tough. I said I thought the market was going to run maybe 3 or 4 points, either up or down. This could be the top. It could be a small wedge, or it could be another breakout pullback if the market broke out. Once the market breaks out, I normally look at 1 and 2 minute charts to see if I can get a high 1 or a high 2 entry. Let me look at the 2 minute chart. There was this little pause here, and I did not take it. So to me today, I just ended up missing too much of the day. And, because I was looking for particular setups. For example, here I was looking for a two-legged pullback, but I didn't want to see this as the entry, as the setup. But so often on really strong days, you get really bad-looking setups. But that's life. I prefer something better than this. I prefer to see a deeper double-bottom pullback. But if I don't get what I want, I don't take it. So for me, this was not a satisfying day because it didn't unfold according to the probabilities as I read them. But, sometimes that happens. Also, 3 hours of the day were very difficult. The market did nothing for 3 hours. You can either get upset by it, and you can wonder, is the market going to be like that forever? Or you can just dismiss it and say, sometimes the market's easy to trade, sometimes the market doesn't give any opportunities, and not worry about it. You just know that there'll be good opportunities, the next day. This may turn into a large final flag tomorrow. On the 60-minute chart, the daily chart, obviously wants to test the 1100 area, and since we're fairly close to it, I'm assuming we'll go for it tomorrow. Okay, well, tomorrow's another day and another opportunity to try to do things better. Have a good night, everybody.